Hello guys, welcome to FNC Forex Trading. This is our first video and this is our first webinar. So for this video we are going to be doing a top-down analysis of Euro USD. So here we are smart money traders. To those who don't know about smart money trading, I think you're going to learn it here. So if you are someone who was using indicators or moving average, or you are still new to forex trading, I think this is a right choice that you have made. So today I want to do a top-down analysis of Euro USD. So the first thing that we do when you are trading, we do what we call a top-down analysis from the monthly time frame up to the 1 minute time frame. So top-down analysis just help us to know where the market is moving. So as you can see from this Euro USD, we can see that the market have been bearish for months, because the market was making high highs, high lows, high highs, high lows. As you can see from this, we can see that this is actually a downtrend, right? This is the first assumption that you're doing. So now, which means for all the targets that we will be doing, we can even hedge to the downside, we can even hedge to the upside. It just depends with what the market is thinking to do. So we don't want to spend much of the time. So let's do from the daily time frame. So now as smart money traders, we know here we will be doing a 3-step strategy. This is the strategy that I'm going to be teaching you like for years and years, because here we just trade like this. The market moves like this, it creates a high, then it comes here, it creates a low, it creates a high, breaking the market structure, coming back to the supply or demand zone in this zone, targeting this next liquidity. So you are going to realize that when it's a bullish market, we are going to be trading like this, right? This is going to be our strategy for years and years. So now this is the break of market structure that we are showing here. This is the actual break of market structure that you're showing here, and this is our first high. When the price comes here, this is where we get our entry confirmation. Our entry confirmations is something that we are going to be teaching each other in the long run. But for the meantime, I just want to teach you guys how to just view the market structure. Okay, so now from the 3-step strategy that I'm teaching you, the first step here, if we check on this market, it made this impulsive move. It made this impulsive move that you are seeing from this higher time frame, and at the same time we can see that this one is our supply zone. So in the long run, or in months to come, the market can just decide maybe to come and make its way here before it comes and break this market structure. So we are having this perspective from the monthly time frame, but we know that we can't wait for months and months until the market does this. But we want to get ourselves involved in the lower time frame. So what do we do now? Let's say we go to the daily time frame. We can go to the daily time frame so that we can see the fractal nature of the forex. So using the same strategy now. So what you do now, if the market is in a downtrend, we just use the same concept. The market forms its low, it forms a high, it breaks the market structure, it comes to any supply and demand zone, which will be in this area, until it targets this liquidity zone, or the zone that we call the take profit zone. So usually this is how the market moves. And when the market is approaching this zone, we have the entry confirmation that we were talking about, which is something that you are going to be learning in future. So now let's take from this perspective now. How do we view this market? Sorry for these aids. So now how do we view this market? We use the same concept. The market formed, this was a low, a high, a high low, a high, breaking the market structure, forming again a high. So now what do we do now? As you all know, as I was talking about supply and demand zone, this is our actual supply and demand zone, and this zone is not refined. We want to see the actual move that the market is making. This is the actual move that caused this break of market structure. But now this is where the concept of refinement comes in, which is something that we are again going to be talking about as we go. So how do we refine these zones? We can refine this supply zone. Now we can refine this supply zone up to this zone, like this actual zone, this impulsive zone, which made this break of market structure, like this. Okay, so what are we saying by break of market structure? This is the break of market structure, and this is the supply zone that the market left, which is also called the impulsive move, or the move which were caused by the constitutional trading. So now where is our target? The target is on the next low. This low is the low that we are targeting. This low is the low that we are targeting next. So now we now know that the market is going in a downtrend, right? So now how do we get ourselves involved? What you should know, guys, is the reason why we trade is not that we are targeting these pips or these higher moves, but what you are doing when you're trading is, when your setup presents, you just want to get yourself involved, and you present. If your strategy presents, then that's where you enter. So now from daily time frame, let me go to 1 hour time frame, since we know that from what I've showed you guys, we are saying this now. Let me put in let me write it like this. This now is supposed to be our target. Let me write target. This is supposed to be our target, or the next liquidity zone. We know that the price has tapped to our main actual zone. So now how should we get ourselves involved in this kind of a trade? Now we do the same concept here. If we check from this, so now we know that the market have tapped to this zone and is now making its way down to this target, or to this next liquidity zone. Now how do we get ourselves involved in this trade? We do the same thing. Let me try to go like 30 minutes time frame, so that we can see the fractal nature. So we can see here from the same concept that we were teaching each other, the market formed a lower low, lower high, lower low, lower high, lower low, lower high, lower low, right? So this is something that you can even see from the fractal nature of the market. But what we can see from this market is, it was making these lows, it left what we call the supply or the demand zone, which was mitigated with these candlesticks. So mitigation or imbalance, to those who are new to it, is something that we are going to be learning in the long run. But for the meantime, we're just teaching each other how to view the market, or how the market is fractal. So using our three-step strategy, we said we first detect the impulsive move first, then now we choose our supply or our demand zone, which is here. Then the target is always the next liquidity zone, which is the zone which I think the market is probably going to reach here. And now I've said for the entry strategies, which are here, is something that we are going to be teaching each other in the long run. But for the meantime, I can just do a brief quick of how some of you maybe who are professionals or who still wants to know more about how to end a trade. I think you all know what's called a Wyckoff. If you are able to spot a Wyckoff, you can even get yourself involved in this trade. If you see this from the market was making high highs, high lows, high highs, high lows, high highs, but you can see from this point the market came and break this last low, making this impulsive move. So we all know that if a market breaks this last low like this, we target the last supply zone or the last supply or demand zone, which is the one that we choose as an entry point. So for here, if it was me who was trading this, I could have come to this point. Maybe I just put my stop loss just above this, then I scroll down here, targeting maybe 20-40 pips to all those people who likes those big pips. It just depends with you, but the actual thing to do is to target this next okay, I'm sorry for this liquidity or this next target that we have talked about. Let me show you in a clear sense that you can see, guys. Okay, I think my entry was around here. Let me search for my entry because I don't want to confuse you guys. This was our entry from here. Okay, let's go to 5 minutes time frame. Okay, wow. So you see, if you were using the Wyckoff confirmation in the supply and demand zone, you could have got yourself involved into this very big trade. And if we're using a higher lot size, I know you could have been making a good enough money. But here we don't actually focus on money, we actually focus on the technical analysis of the market. So now, where is the market? We can see that as the market was going down, it was consolidating, or it was making high highs, high lows, high highs, high lows, higher highs. So from where the market is now, what are we anticipating? We just do the same. Our strategy, the impulsive move that was made from this, right, in our supply and demand zone, which the trade left here. So what are we anticipating now? We anticipate the same thing again, that if the okay, yeah, I think I'm having a problem with my PC. Okay, so what are we anticipating? Okay, let me delete this. So what are we anticipating? We're anticipating that if a market is supposed to consolidate and comes to this zone, targeting this next liquidity zone until it breaks our main market structure, right? So this is something that guys, we are going to be teaching each other, like as we go. Don't worry about what I was talking, but what I just wanted to show you guys is that whenever you are making the market analysis, you just have to use this 3 concept strategy that I'm teaching you, which is something that you can view the market very easy. And I will teach you as we go how to view the market, how to actually interpret and get yourself involved, because there are actually really many strategies that you can use to get yourself involved in the market forex, right? So for the meantime, guys, what I can say is the market is still going to this bearish movement or the down trend movement. So until the market shifts to the bullish side, that's when we start to target the bullish. But for the meantime, we are still on the bearish. So to those who are traders or who are up to seeing or those who want to get themselves involved in the trade, I think you can use the simple strategy that I've showed you, that here is EUR USD 5 minutes time frame. You just wait for the price to get to this zone, Then if it gets to this zone like this, let's say I don't know how the market is going to move, but if it gets to this zone, you can use your entry criteria that you use to target the market down to the next liquidity zone. This is our first anticipation, but it doesn't mean that if we draw this anticipation, the market is going to respect it. No, the market can even do this. Let me show you to those who wants to get themselves into the trade. The market can do this. The market can even come and start to consolidate like this. Then it breaks this market structure. So when it breaks this market structure like this now, which means it left again this supply or demand zone like this, then we also target the same until the market comes back to this zone, targeting the next liquidity zone, making a new structure, which means if the market approaches our supply or demand zone like this, that's when we use our entry criteria. Then we start to target the higher highs. So which means all these higher highs or all these zones, they will now be the liquidity zones or the targets. We use these zones as our target, which means if the market decides to do that, that's when we get ourselves involved in these trades until we start to target these highs, you see, like this. So forex is not actually a tough thing to do. It's something that you just have to analyze and take time to do your technical analysis and to know how the market is behaving. And at the same time, we want to get ourselves involved in the market where we are using a small stop loss, so that we reduce the drawdown or blowing the account. So for the meantime, guys, that is what I have for you. For those who are interested to know more about forex trading, our company is called Global SMC Trading. Global SMC Trading. You can go to all social media platforms: Facebook, Twitter, YouTube, anywhere. You can just go and type Global SMC Trading. That's where you can see us. At the end of this video, I'm going to be providing my contact details to those who wants to join our groups and free education. We are providing free education to people who really wants to know about forex trading. So guys, thank you for the time. Thank you for everything. I'm signing out. Global SMC Trading.